What's going on, everybody? It's Jeff here. Welcome back to the channel. Market pretty flat today. AMC is coming back after its massive dip down to that $42 level. I didn't make a video yesterday, so I'm going to update you on everything that is going on inside the market and in AMC. So let's get right into it. First off, oof, what a big miss for the jobs number. The expectations were north of 700,000 jobs added, and they only added just under 250,000. Massive miss. Two sectors that really disappointed were retail and trade and leisure and hospitality. You could see education and health had a pretty nice add to it, especially with kids going back to school. So let's take a look a little bit deeper on what this means for the market. As you see, I have highlighted right here, there still are 5.3 million jobs short from the levels that they were at pre-pandemic in February of 2020. Why is this bad? Why are they weighing on this? Because this also could show that the economy is stalling, and that is never a good sign. Another reason why we could be potentially 5.3 million jobs short is one, like I said, some of these restaurants have closed down. They haven't been reopened. Some of retail has closed down. And unfortunately, some businesses outside of those two sectors have been shut down. They were negatively impacted by COVID. But also, the government printed so much money for so long that it comes to a point that even though you have the extra $300 that is set to run out, and we don't know if they're going to extend it past, I believe it's September 6th is the deadline. We don't know if they're going to extend it, but even though it's running out, you still have a lot of money that is in circulation. And like I said, if I know where I am, up in Connecticut, you look around and everybody is looking to hire. So if investors see a stalling economy, that curve flattening and that recovery, and especially that it is beneath the levels of where we were a year and a half ago, that is really not a good sign for the market. On the contrary, it does look like the Fed is going to have to continue their easy money policy. They had said that in the minutes that in order for the tapering of the asset purchasing to begin, they need the labor market to be stronger, and having a miss as they did from 235 to expectations over 700, you can expect to see that tapering to be off the table and the easy money policy to continue, which might continue to be good for the short term. But like I said, you're just kicking the can down the road. So we're going to continue to ride these small plays that we've been playing. I joked around. I said it in the group today when somebody was, talking about SPY going down. I said, change my mind. Nothing right now can stop the S&P 500. So just keep that in mind with your plays. Be vigilant on any of your longs. We've been playing very short plays, having some really good success. I will shout this out yesterday. I shouted out KPLT and SQBG, both starting to fill the gap. I'm going to give you a quick update on these. They're doing pretty well from where I had the levels we had called them out. This one's sitting up, getting up to 775 today, and the same thing with SQBG hitting up to that 9.4 level, up about $1.50. If you're unfamiliar when it comes to filling the gap, you can go look it up. What does gap fill mean, and read on it. But as you can see right here on the daily chart, this massive drop that happened either after hours or pre-market into open, that's what caused this gap right here. And when the price begins to enter that gap, many times than not, it will actually fill the gap. That's why they call it a gap fill. Now, it doesn't always have to fill the gap, and it doesn't mean just because, let's say the gap on KPLT, I'll even show this one, it's a little easier to see. You can see it began to enter yesterday, but it wasn't confirmed. It just had a wick above it. It wasn't confirmed. And even today, because we still have time, if this begins to sell off, it's not quite confirmed yet. This one was a nice, good short play. I mean, it was up about, I think, close to 30%. There was actually somebody in the group that bought the 917 750 calls. He was up 146%, cashed out on that. So absolute props to you. But this is what's known as a gap fill. Check it out. You can look it up and do some more research. It is another technical setup. Those two plays actually crushed it for us. Let's get into AMC as we are ripping back, trying to get back to that $44 level after going all the way down to the $42.50 mark. First off, Ortex did report a short increase. All right. And if you look back to what happened on September, this is when the stock was heavily shorted as well because of the analyst downgrade. It's actually kind of funny because this editor right here, this author right here, actually had posted an article yesterday saying that saying that this analyst still defends and reaffirms his position that he literally had taken 24 hours later. So if you're an analyst, making a call and an underperform in a bet on a stock, I really hope that 24 hours later you continue to reaffirm your statement that you said. But this is just Main Street Media's way to really spread some FUD and try to add some additional shorting going into it. Let's take a look at what happened today. Look at this volume. I mean, we still have, an hour left to market close, but 44 million shares. There's nothing really happening in this stock. A lot of investors are gone. You've got the computers that are just doing the trading for them, as well as some other retail traders jumping on the shorts. You could take a look at the times and sales and just see the way that some of these orders come through and how they come through. It is some retail traders, okay, on some other platforms. I am on, Thinkorswim, and if you look right up here, it says HTB. It's hard to borrow. I cannot short this stock. I would never try to short this stock as well because I've been, through this journey, since January. But there are some retail, your professional traders that are shorting the stock on other platforms, riding that wave all the way down. It looks like it's going to recover. Let's see if we can get it back to that $44 level back going into close. I will say this right here, where we still stand from a daily standpoint, we have massive resistance as I am seeing this at like the 48 to 48.50 level. 47 for a full break, but the 48.50, as you can see, where these three candles right over here back in early July act as a strong resistance. We break above that, we're going to see some positive bullish movement. Guys, there is a lot of money on the sidelines still. I know individuals like myself have been holding. I've been in on this all the way since January. I added to my position, I think it was back in April, May time frame to it as well. There are a lot of people that are still in on this situation, in on this play, but don't hesitate. Look what happened last time, thinking the massive amount of money that is on the sideline, just waiting for that confirmation. And it's just like I talk about with the play I had just said when it comes to, KPLT, waiting for that confirmation of that strong close. We got in on this to play a short term, but in order to play this all the way back up to that 945 level, wait for that confirmation. You want to get in on this play, that's fine. Get in on it, ride on it. If you want to, swing it, keep your, keep your shorts at this entry right here, which would be like about the 594 level. The same thing goes for AMC when it comes to individuals that are looking for the confirmation, that aren't necessarily following this play as closely as you or I, have been. So once we see that break over it, you're going to see a lot of flow coming into this. And that's why some of these indicators have even shown the short term, the midterm, and the long term projections just by straight chart, technical analysis and the way the charts read, that it is very bullish in all three of those time frames. So that's going to be it for this video. Enjoy your 3-day weekend. I'll see you in the next one.